There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference. All right, everybody, welcome once again to Hard Money. Good to have you along. John Scholes here, alongside, of course, Darren Long, who is running the show, Delta Harbour Assets. You want to go there and learn about precious metals, physical metals in the likes of gold and silver. Do you have any in your portfolio? Why not? No, we're not going to scold you today. What we're going to do is educate you, as we always do on the show. DeltaHarbor.com, Harbor with a U, because this investment is all about you. 1-888-335-8645. So there you go. A couple different ways to reach out. And if you are watching this on our YouTube channel, good for you. If you haven't, you can go over to the YouTube channel. They have their own. It is youtube.com/Delta Harbour, again with the U on Harbor. And you'll be set up nicely. Okay, Darren, let's get right back, or at least get right into it for this week. Last week, you talked about the impact of the vote is going to have on metals. That was pretty in-depth last week. It was pretty cool. Conservatives, liberals, NDPs all play a role. And this week, we're going to expand a little bit further and look behind the scenes, the health of the U.S. economy. So go south of the border for just a bit. We will get to that. But before we do all that, the market update, pal, how are gold and silver looking right now?
Well, John, I thought it was fitting that this week's show would be called Fall Economy. And fall has obviously a dual meaning there in that sense of the word. But the gold and silver markets, as expected on news of retail sales alone in the U.S., did lose their support levels. Gold did break below 1,800 and is currently trading at 1,750 range, and silver lost the 24 range and is currently in the 2,250 range. It's a nice bargain for the week. So we took advantage of it. A huge congratulations to those that did get in so far. We sent out a couple of different emails, and certainly, unlike most places, we don't tend to push the buying at higher prices. We tend to connect with our client base when the buying opportunities present themselves, which means more money in the pocket long-term for our clients. So with that being said, we put together a nice email and it was responded to very well. We still have 100-ounce RCM silver bars as part of that email on sale right now at spot plus $3, which is unheard of in the industry. While that remains, we will certainly, until we have none left of the inventory we have currently, we will keep that open to any new listener. So congratulations to those that came aboard, and welcome to Delta Harbour. If you're a first-time gold and silver owner, we're glad to have you here, and this show is all about you.
It is indeed. All right. As we mentioned, 1-888-335-8645, DeltaHarbor.com is how you get a hold of the guys and do more research on your own outside of the hour of this show, right? Health of the economy is and continues to be a subjective topic for sure. It's not always a straightforward discussion, right? As we know, headlines tend to lean heavily on small bits of positive economic news without really shedding light, Darren, on the truth of the matter. It's always been that way. So let's discuss that. What do you say? Do we have cause for concern at the moment, and how much?
Well, the answer to that is an overwhelming yes, yes, yes. We do have cause for concern. I mean, headlines say one thing, John. We've done this show a lot of times where we've discussed what's behind the headlines. In fact, I think for maybe 2 or 3 months straight in a stretch about maybe 8 or 9 years ago, that's all we focused on was what was behind the headlines, because we saw a lot of things happening, but really we knew that the truth lies always behind the headlines. So if we take a peek behind those headlines, the one big thing this time of year, and why we call the show this week the fall economy, is because seasonality plays a huge role, and seasonality dictates that there is generally going to be a lightening of the load, so to speak, John. For many investors this time of year, as they get back from summer holidays and the summer doldrums, they've been with family, and certainly a lot of people thinking post-COVID, but we don't know now for sure, and they refine their wealth. So they might change or make different structures in their portfolios They might get rid of some of the dead horses and they might add some more. But this is generally a time of year when we see that happen. Case in point, a shave and a haircut this week to the broader stock markets of about between 0.5% to 3%, depending on where in the world you're looking at. And the NASDAQ, S&P, TSX, the Dow Jones all lost ground this week. And for me, it's just a matter of looking back historically. I've been in this market for 17 years, almost 18 years now, and history is not on the market side with respect to the S&P 500. It averages about 0.5% decline every September, year over year. And it is the worst average loss of a month in the entire spectrum. The same can be said of the TSX here at home. And those September losses typically come on the back half of the month. So right here where we are positioned, Monday, obviously the vote, and we're going to know who or what party is going to be leading us. And if things go well, we'll see a change of hands. And if they don't, we just drop $600 million for nothing to be in the same damn position we were as before. But some of the volatility that comes during September is often surrounding the so-called quadruple witching. My partners and I, Rob and I, were talking about it this morning. And this occurred at the close of Friday's markets, which basically is the expiration of the stock index futures, the stock index options, stock options, and the single stop futures. And again, that might be a lot for people to swallow, but investors know it. They've heard it. It's out there. It's floating. And we expect volatility to increase over the next month, John, driven by what we call a seasonal pickup in investor uncertainty. There's going to be continued virus uncertainty. Does the variant grow from here? Do we have closures? Do we see this passport system succeed? Do we get to 90% vaccination rates? We don't know. And there'll be significant monetary and fiscal policy catalysts. I personally don't think interest rates go anywhere. They stay low. And the amount of bond buying by the U.S., the Federal Reserve, is not going to change, nor will it change here at home. Not at least in the next few weeks, which adds to expectations that the Fed and the U.S. also believe the economy is still on shaky ground. They're going to continue to support it, continue to print more money, and continue to use the same manner of tools that they've been using. They themselves don't believe the economy is going to grow from here. Otherwise, they'd start slowly redacting all of the support they've been giving. So we expect broad volatility to increase here.
1-888-335-8645. Anytime you want to reach out to Darren, Rob, Roy, the rest of the team at Delta Harbour, or deltaharbor.com works as well. So next week, the Fed will meet for their monthly review of the economy. What's expected, do you think? And are they going to start tapering at all? Are they going to address the inflation problem, which, by the way, you went heavily on last week?
We did. Well, the Federal Reserve meets for 2 days next week on Wednesday. Tuesday, Wednesday, and they're expected to give further clues as to when they may start to slow their it's 120 billion a month in bond purchases that have supported the recovery, but also these bond purchases have, and we'll discuss it, aided in inflation, which we need to touch on in the next segment. But ultimately, before we go to break, these are among the reasons, John, why we say gold and silver needs to be part of your wealth strategy. And when you're looking at that, look no further than Delta Harbour. Whether you're a listener and you want to buy gold and silver to take home, put in the sock drawer, store yourself, just to keep as a safety insurance policy for your wealth, that's easy to do through Delta. You can also store it through us. You can put it into a registered account, TFSAs, RSPs, and all of those things, which we'll discuss further in the show. And we have the option of financing. So you can buy up to 80% more than you typically would with the same dollar. We'll talk about that later in the show as well, John.
Yeah, we will expand on different ways to get your portfolio happening with precious metals more in depth, of course, later in the show, like we always do. So stick around for that. Or if you want to call on your own anytime, 1-888-335-8645 at deltaharbor.com. We'll continue with Hard Money. This is Sauga 960. Welcome back to Hard Money here and Sauga 960, and on YouTube as well, youtube.com/Delta Harbour, Harbour with you, reaching out to Darren and his crew. Super simple, right? You can go online to deltaharbor.com or 1-888-335-8645 to do so. It's the fall, F-A-L-L, fall in quotes economy. And welcome back to all our listeners, guys. Darren, continue on today's theme of the fall economy. You mentioned the ugly inflation. word in that last segment. And some might think this again, but you guys were right. I mean, you've talked about this before. So far, this is not transitory. What are your thoughts on this fall and where inflation goes from here? I don't think it's going to be a rosy picture, but what do you think?
Well, I think we were right, John. I think the call was right. We made it a long time ago. Some 3, 4, 5 months ago, we were talking about inflation as a potential threat, as a problem. We saw it coming, and it will increase, I believe, from here. And this is the crossroads, John. This is where we're at. When inflation sets in, the Fed needs their tools of higher interest rates and the ability to slow the economy in order to traditionally make sure they're keeping inflation in check. But with the way they've set themselves up, it's a lose-lose situation. So we have a vote here shortly, and we're about to have a different looking government. On the heels of the situation, we just got a report here in Canada this week that inflation has now reached 4.1%. Well, that's on paper. That's not behind the scenes. That's not what you and I are experiencing. That's for darn sure. Yeah. And I look no further than my own home. John, we share the responsibilities at home between myself and my wife as far as shopping is concerned. I'll help. She'll help. I'll do it. She will do it. During COVID especially, we've rebalanced the way we handle all of the family tasks that we have to do so as to be safe and sound. But ultimately, one thing we do recognize is that there's becoming a wider gap between where you go to pick up your food. Now, in the early days of inflation last year when we were on air, we talked about that being an issue to a certain extent because the onset of COVID meant the slowing of delivery, the slowing of supplies, the slowing of manufacturing, in that sense, the pulling of vegetables and food items and the creation of them. And really that was down to transportation, right? We had border closures. We had all kinds of stuff that prevented us from getting food. Ergo, what we do have goes up higher in price because the demand is still there, lower supply. Now we're looking at it in a different sight because now the cost of those raw goods, all those vegetables, all the meats and all those things that we get, the dairy products, all of them have gone up in price. And when they report 4.1% on paper, which is, by the way, the highest in 20 years that inflation has been in Canada, you can't help but think that our call for a big commodity super cycle, a huge uptick in the raw materials costs, the manufacturing costs, this is coming to full fruition, full steam ahead. And the same thing can be said in the US, right, which is to say that their 6%, which is happening right now, is also the same, has the same effect. It's not good at all. Our gas is getting way more expensive. I can't believe people are not out in the streets burning down gas stations because of the cost of gas right now. Nobody's saying a word. When this happened in 2008 and the cost per liter rose to $1.30, where it is right now, John, and even higher in some cases.
$1.40, yeah.
Yeah, $1.40. A barrel of oil was up at $130 to $140, $150 per barrel. Mm-hmm. It's now treading between 60 to 70, half the price it was back then, but the price per liter at the pumps is exactly what it was back in 2008, that crazy speculative moment. So what happens when a barrel of oil reaches 100? Seems a reasonable price to pay given the history of the pricing. Yeah. But I can tell you at the pumps, we're going to be paying $2. It's going to happen. Be prepared for it. Means your disposable income goes less and less further. And if we equate this to what it means for transportation, the cost of gas touches everything, means food prices are going to rise. Housing has already been a nightmare. We know that that has contributed heavily to inflation, and what it means to our economy is the housing market is heavily connected to our economy. It's also dragged utility costs higher. Nobody's talking about it. Yeah. Nobody's using this as a method to get word out there that we have to make change. We have to make big decisions. We can't be in this spending mode forever, John. This is why we need to have quality assets. As investors, we have to see the storm coming, and we have to be proactive, not reactive. And as you hunker in for this fall, it's time to have a good look at that portfolio. And if your portfolio is not averaging at least a bare minimum of twice what inflation is, which is 8%, then you need to consider making changes. It's time, John, to stop making all of the institutions around us rich as can be with little or no support. Take hold of your wealth, make your changes. It is the most important thing you will do with money, is to know where it is, what it's doing for you, and where it's invested. And part of that is understanding where your family's needs are, where your goals are, and what can help you to reach them. We believe, John, obviously, that gold and silver are among the finest assets in the world, the best ways you can diversify your wealth. Everybody, and there is no exception to this rule, everyone should have physical gold and silver in their wealth strategy today, because the printing presses will not stop. And one of the key areas are going to be precious metals, and they have been for millennia. They're going to come to the forefront. And sooner or later, you'll be hearing this show, not when the price of silver is $22 and very affordable, but when the price of silver has gone to $100+, and it's now a question of whether or not you can really afford to buy it, when you should have been listening and thinking about it right now when it's cheap.
Yeah, again, later in the show, we'll get into more detail how you expand your portfolio with those precious metals. But in the meantime, you can have the number down and keep it with you, 1-888-335-8645 at deltaharbor.com. You know, it's funny you mentioned that, because I remember exactly where I was earlier this week. I was driving up Martin Grove, just south of Rexdale, and I heard on the news, they said it was 4.1% rate of inflation. And right away, I thought of you in this show. I thought, no, it's not. No, it's not. That's what everyone thinks it is. I remember where I was when I heard that on the news, and I thought of you right away saying, no, try doubling that. Like,
yeah, absolutely.
You know, I can remember it, but you know, good points though. And you know, these low interest rates, they're making you nervous or what?
They are because interest rates tend to be, well, first off, we have to understand this is the largest debt in our nation's history. Consumer debt has creeped way up. Debt associated with housing is the fastest growing segment because we've gone completely house horny. I mean, this is the problem with housing. It's become a nightmare for us because the reality is, whether you're experiencing the fear of missing out or whether this is recency bias, we all think housing prices got nowhere to go but up. And this is the furthest from the truth. We had a colleague of ours on a couple of months back, Asif Khan. He's one of the rare few people that I trust in real estate, and among the first to say that real estate is misunderstood. You must have it. It's a great hard asset to own, land, property, but ultimately not at the risk of your wealth. And when we're putting, 60 cents of every dollar we spend into housing costs overall in our lives right now, it's no wonder that 90% of the people cannot afford to buy a home right now. And ask yourself, as a listener, could you, if this was your first home purchase, afford to pay the average price in the GTA Mississauga area of $1.1 million? I already know the answer. The answer is no, you can't. You'd be lucky now if you've been working for 20 years, if you could afford straight up to walk in, lay down $200,000 in cash to put down a reasonable 20% of that $1 million home and step into it. But people are scrounging, and as this happens, interest rates become a real issue, John, because how do you raise them? You can't. When 6% of our GDP in the last year comes from real estate transactions, it tells us that people are buying houses hand over fist. Whether it's for speculation or not, it doesn't matter. The housing boom is here, and it happened, and it's continuing to happen. And interest rates have to stay low, because if you were to see your mortgage rates jump to 3.5%, what are you going to do? How are you going to pay those bills? How are you going to pay off the utility bills, the cell phone bills, the car bills, your gas, your food, your shopping, right? Yeah. This is what's going to happen. Every kid and every family is going to have to forget about education. We're all going to have to go to work and have jobs. We're going to have 5 incomes just to support a damn family. And that's the direction we're heading, John. Make no mistake, because governments are scared and afraid to do anything about this. Interest rates need to rise right now, but they're not going to. They're going to stay low because the cuddly left way is the right way as far as governments around the world are concerned. And it doesn't matter where we are. It's happening all over the world. We're going to talk about China a little later in the show. We have to cut expenditures. Interest rates are a double-edged sword. If we allow them to stay low, we create more inflation. We create more problems. And inflation without a booming economy, we get stagflation. So that's a huge risk to the economy. And ultimately, we got to do something about it. Push rates higher, we kill the housing market. Either way, John, this is the calm before the storm. We need to be smart. We need to add quality assets to balance our wealth strategy. Not only is it fair to say we can have our traditional assets, stocks, all that stuff, we'll talk about more in the show later, but we got to add quality hard assets, gold, silver. They've been around for hundreds and thousands of years. They are the only form of true, real hard money left in the face of the earth today. You've got to own them.
And we'll get to that, how to do it in just a bit. 1-888-335-8645, the number, and deltaharbor.com online as well. We'll continue. This is Hard Money on Sauga 960. All right, welcome back to Hard Money. John Scholes here. And of course, Darren Long is giving you all the information you need to make that wise investment, that wise purchase, that part of your portfolio, which maybe has not been explored yet. That would be precious metals in the form of gold and silver, physical metals. You can actually look at them, hold them, bang them off the floor. That's the type of stuff we're talking about, how to get them into your portfolio. We'll discuss that in much more depth in a few minutes. But, people like yourselves, Darren, believe that the waters ahead are murky, to say the least, right? They want to diversify into gold and silver. Let's go going. How do they do that? Why should they be doing it?
Well, there's a magnitude of reasons why you should. And again, remember, if you're listening to a show like ours anywhere else, the one thing we don't prescribe or say is that gold and silver are a replacement for your traditional investments. We believe in a balance, John. We believe that 10 to 20% of your assets would be comfortably parked in gold and silver, and that it's a very simple thing to do. This isn't the old days where it was antiquated or hard to move around. If you take it home, yes, could be heavy. You want 1,000 ounces of silver, it's 68 pounds. So, bring your wheelbarrow. But if you're in storage, which is one of the options we have available at Delta, it's a phone call. And if it's in a registered account, it's a phone call. You'll have a dashboard, all the traditional tools at your disposal to research the markets and all those things, charts and options to look at what prices have done, seasonality charts. All those things are great about being part of Delta's atmosphere and infrastructure. And as a client, I've been so supportive of the notion that growing customer service is the one key way to maintain the growth of a business. And it's our mission. And it's why we talk about, the word harbor in the letter U, right? The Canadian spelling of harbor, because we believe, honestly, it is about the wealth of the clients. And so gold and silver, John, it's a simple thing. You can go to our website, look at pricing, make a purchase, take it home. You could obviously store it, as we just mentioned, safe and sound, allocated to you, your account, your name on the account, your serial numbers, and we can set it up so that you can visit the product and see it anytime, make buying or selling changes very easily by phone. You can put it into an RSP or TFSA. Heck, if you have an existing RRSP or TFSA, which is about 60% of Canadians, you already have the money in those portfolios to be able to buy gold and silver. We can use those. Find something that's not making that much money, or that's lost money, or that doesn't look good in the near term, and we can replace it with gold and silver very easily and show you how to do it. It's a self-directed account, so it teaches you and educates you how to handle your money much better than you currently have, and you don't have to rely on anyone else. This is not the time to do it. But also, John, on top of that, we offer the financing, the collateral financing. They can finance up to 80% of their gold or silver purchase. Why do it? Quite simply, to play with other people's money. If you can afford it, why not risk somebody else's money instead of your own? That's what we love about collateral financing. It's not an option for somebody who only has $1 to go out and spend $3 and then be in debt to and not be able to pay it off.
Right.
This is the concept of using other people's money. And your equity is going to grow. The value of your metal in silver or gold will grow, but you're risking somebody else's money to do it. And that might also be an option that you might find advantageous. So all those things are possible when you come to Delta Harbour, John.
We'll drill down a little further exactly how you get that portfolio started, no pun intended. But I want to bounce over, sidestep anyway, Darren, to an article you mentioned at the top of the show you wanted to get to. This from the Wall Street Journal. And basically illustrates that the housing market over in China, and maybe not as rosy as everybody thinks. Give us some details for those who are not aware of it.
Well, set the tone, John. This is a show about the fall economy, and we emphasize the word fall because it could be a time in which we start to see the leaks start to spring everywhere around the hull of the boat, and eventually leaks will sink the ship. So we want examples of other places in the world. It's not enough to say, hey, these are happening here at home. So, of course, the story that's developing is in certainly the news this week, which comes out of China. And I thought Wall Street did a great job. Rob, actually, my partner, brought this article to our attention, and ultimately the Wall Street Journal reported it. But this was on everyone's website, all the news, all the major ones. And basically, this involves China's largest housing company that builds houses, and they have their foot into everything. They're super leveraged, they're builders, they're tied up in suppliers and all kinds of things. They basically shape the market. They are the largest builder in China, and they have investments everywhere, including owning portfolios of properties outside of China, which we'll talk about in a minute. But imagine an avalanche falling, John, to summarize this. And at the very bottom of that avalanche is where Evergrande is right now. An avalanche of snow is falling down the hill, and it lands all at the very bottom of the hill. And Evergrande is right underneath all of it with about 300 billion US dollars worth of debt. And Evergrande as a company is so huge that the fallout from any failure could hurt not just China's economy, but it could bleed, or there could be contagion that spreads to markets beyond China. This potential collapse would be China's largest single economic test in a decade or more. So this is a very serious situation right now. It's happening as we speak, as we tape this show. Its share price has plunged already about 80% so far this year. And in trading of its bonds was repeatedly halted by Chinese stock exchanges in the past weeks. So what did the Wall Street Journal have to say about this potential contagion and the problem over there? Well, I quote from the Wall Street Journal: "The main problem is figuring out where the danger lies. Evergrande's 89 billion in loans and bonds alone is only part of the picture. Far bigger are the liabilities the company owes to suppliers. Some of that debt must now be circulating through China's financial gray market, in which the sale of assets such as accounts receivable can substitute for normal bank credit. Evergrande also owes new homes to many individual buyers who paid in whole or part for homes that aren't finished yet, and who may have borrowed to fund those purchases. It will take time and considerable effort for authorities to understand who is exposed to Evergrande and to what degree. But some creditors aren't waiting." And the article goes on to say, protests have broken out at Evergrande's offices throughout China as suppliers and home buyers demand what they're owed. So this is out of the Wall Street Journal. It's a paid for subscription, but ultimately you can find this article out anywhere on the internet. It's talking about it on CNBC, the Times, all the major publications, and here in Canada, the Globe had something on it. It's a major situation. It just goes to show us that there are other leaks in this economy around the world, the global economy. And when we hear of China having housing problems, we know that the government is likely to support them. But ultimately, it's a huge, huge intertwined, complex company that involves a lot of real estate, a lot of problems. And if China's economy, God forbid, was ever to break down right now, it'll pull the entire global economy down with it.
Pretty scary stuff. We'll talk a little more about that and get to more details on the actual investment of gold and silver as well. First, a quick break. 1-888-335-8645. That's the number you want to reach out and have more of a lengthy conversation with Darren and his team. No problem. DeltaHarbor.com online. Delta Harbor with a U as well. We'll continue. This is Hard Money on Sauga 960. Hey, welcome back to Hard Money. Good to have you along. John Scholes here along with Darren Long. You want to reach out to Darren anytime. Get that investment happening. Learn, educate about it before you step in, right? Be a know-it-all. And you want to do that in this case as well with hard assets like gold and silver. Darren, Rob, Roy, the entire team at Delta Harbour are standing by and ready to hold your hand, have the conversation, and get it happening for you. Open up that end of your portfolio if you have not at least ventured there. Have a taste of it. 1-888-335-8645, the number, deltaharbor.com as well. That was a pretty scary article you mentioned in the last segment, Darren, from Wall Street Journal about China and Evergrande and their implosion of that particular company. How it's like when China sneezes, the entire world gets sick. It's just the way it is. But you keep saying, and I know that we have more proactive in our wealth, and we have problems over here as well. We care more about what is happening now. It's a good show today because we're talking about the fall economy. We get the tongue in cheek there. It's a good title for you, but everything is obviously not as rosy as it sounds. And I think our listeners would agree that there's a lot of uncertainty with leadership and this federal vote coming down in a couple of days. It all circles around things we've been discussing today. What else is creeping out from behind those headlines that you see that most people maybe wouldn't?
Well, in addition to all the things we talked about, I think one of the things that a listener might say is, but I'm seeing stock markets doing very well. Right. Dow, NASDAQ, TSX, all very close to their all-time highs. Very, very few examples around the world where the stock markets are really falling down or there's no breakdown, everything like this. But you have to examine it a bit further, John. As you said, behind the headlines is the not so rosy picture. CNBC reported this week in an article entitled "The Stock Market is Undergoing a Slow Motion Deterioration with Pockets of Shares Down 20% or More." That's a mouthful. And this article basically talked about how there are fewer and fewer and fewer major companies that are actually supporting those levels in the stock markets. And basically they noted a number of different industries and different sectors of the economy. And it's important to share it because the data from that article showed unequivocally that although many of the major indices in North America are very close, as we said, to their peaks, the value is now starting to rest on fewer and fewer companies. And they use the following examples. For example, in industrials, in materials, these are the percentages that these companies are off of their 52 week highs. Now, most of these companies hit all-time highs in the last 52 weeks. American Airlines down 26%, FedEx off 20, DuPont down 20, PPG down 18%, Caterpillar's off 17%, Lockheed Martin, 3M. Now, that may not be huge in the grand scheme of things, but let's take this a step further into retailers. Now that's huge in the US. Nordstrom, we all have heard that story this year. It's going nowhere as a brand. They're off 41% from their 52-week high. The Gap, 36%. And we know here in Canada, lots of Gap stores have closed up. Not the brand it used to be. Abercrombie, 25% off of its 52-week high. Kohl's down 20%. And there's a ton of that happening here in Canada. And they say, and I quote, "The China slowdown, particularly the decline in retail sales due to COVID issues, is dramatically affecting not only those sectors, but also luxury retailers, many of which are based in Europe." That's an important point, John, because we often talk about the wealthy being bulletproof when it comes to recession, because they have so much wealth. And in the last 12 months, their portion of the wealth has grown faster than anyone's. But luxury retailers are also down. Kering, 20%, Tapestry, Richemont, Movado, Louis Vuitton, all of these are off their 52-week highs. And the article goes on to say further, supply chain and labor problems are affecting the ability of some home builders to fully deliver on orders. Well, we just talked about that in China, but home builders like Pult, KB Home, Dr. Horton, Lennar, these are the largest home builders in the US, and they're all off from their 52-week highs. This is not rosy. Even pharma's off, with Biden administration wanting to put controls on drug prices. Those suppliers are off. And again, people may shake their head and say, well, we don't really care about that. But it paints the broader picture, John, which is with a stroke of a brush, all these headlines get pushed out into the economy, into the media mindset through all of our social networks. And we don't click the link to actually read the article to find out that behind these headlines are a ton of problems. So why do so many analysts and strategists remain bullish? It's all based on the theory that this Delta variant will prove to be a diminishing force and that earnings will not materially decline, but they are. We know better. This is the end of a cycle, John. As we talked maybe a month or two ago, we talked about boom bust cycles and where we are. It's the end of a cycle. This is not the beginning of a new economic cycle. And it doesn't matter who I talk to. They're not convinced that there is going to be a certain economic growth ahead of us. And so you want to look at your wealth from the perspective of how to protect it and how to grow it during times of uncertainty. I think that's why you add bullion to improve your overall wealth strategy.
And reaching out as we continue on here, 1-888-335-8645 and deltaharbor.com. It wouldn't be fair not to look back historically as well on the stuff that you deal with, and that would be gold and silver since 2004, I guess, when you started in the business. Wow, you've racked up some years, pal. Tell you that.
We have racked up some years, John.
How's it look?
It's been great. I mean, the year to date is not awesome on gold and silver, but they themselves have a whole full quarter to go. And usually the last quarter of the year is very good to gold and silver. And I expect this year to be no different. But gold, when we started doing this and we started working in the industry, was $380 on paper. And that's a long time ago. Silver was $5.50. Gold is now $17.50. Silver is $22.50. And in those 17 years, the change in price on gold is about a gain of 365%, and silver 325%. So you are looking at two metals which have averaged above 15 to 20% every year cumulatively since 2004. And if you're listening, think about this: 90% or more of people that invest in anything are buying stocks, real estate, or interest-bearing instruments, GICs and all the like, and those kinds of things, bonds, things like that. Less than 2% of the entire global market, John, have exposure to physical gold and silver, and that has to change. Ultimately, imagine what happens if 4%, maybe even 5%, it's not a huge number, if they get exposed to gold and silver. Imagine where the prices of gold and silver go. I believe that's about to happen. The next 60 months will tell us for sure, but you've got a chance right now as a listener to own maybe arguably the most undervalued asset in silver, but also silver and gold together to make or form a much more solid wealth strategy going forward.
And again, to reiterate, these are physical metals. This isn't paper investment. It's actual physical silver and gold. You can see it, you can hold it, you can put it in a vault, you can keep it at home, you can weigh it down the bottom of a boat. That's what it is. It's actual physical metal. So you want to get on top of it. And I want to talk more about the demand and where it's coming from, Darren, but we got to take a short break in between. Want to tell people they can reach out to you anytime, and Rob and Roy and the rest of the team over at Delta Harbour, 1-888-335-8645. Online, of course, deltaharbor.com, Harbor with you. And if you're watching this, you know already, but if you're listening to it on radio, youtube.com/Delta Harbour to watch these video casts as well. We'll continue. This is Hard Money on Sauga 960. Welcome back. Hard Money, few minutes to go. Thank you for sticking around and tuning in today. You can always catch these segments, the video cast version, on youtube.com/Delta Harbour. Phone call, no problem, 1-888-335-8645. Online, of course, the good old internet, deltaharbor.com, Harbor with you. Darren, let's talk about this demand for silver. Where is it coming from? Because I believe in this in and of itself set the stage for people to understand why the future is so bright for silver as a metal, physical, by the way, and the opportunity for owners is so amazing if you're buying it right now at these low prices, because you mentioned the market, the knowledge for this is really minuscule. So a lot of people haven't woken up to this. So that's a good time to get in on it.
It is. It's the best time to get in. Only the most astute, John, have taken advantage of the last 15 so years. It's true. There's not a lot of people that we come across that are seasoned investors in gold and silver. Generally speaking, everybody is new to this. So you're in the same boat. You're all floating together when it comes to understanding and educating yourself. One of the most important things to do is to understand why, when we talk about something like silver, we love it so much. It's not just because it's cheap to buy. It's also because of its potential going forward. Silver is used in everything. And on the demand side of the equation, primarily it's used as an industrial metal. Some analysts will argue it's still a monetary metal, but central banks around the world don't buy it like they do gold. So we focus more on the demand coming from industry, because that's what, gosh, the 80% of the demand, that's where it comes from. Sure. So there are more patents pending on silver usages than any other precious metal in existence today. It's used in almost everything we touch. If you didn't already know, the car radio you're listening to on this to this show right now, is got silver in it. The cell phone you're holding up to your ear, if you're listening to it on cell phone, it's got gold, silver in it. The LCD TV you might be watching this podcast on has silver in it. Everything. Our computers, our laptops, our tablets, and think we don't recycle any of this, right? We don't go to the garbage with our old iPads that we don't need anymore, that aren't worth anything, and rip the silver out of it. It just gets thrown away or left in the house, where we don't have big gigantic recycling programs. So it's a metal that's being used up and not recycled. It's used as an antibacterial agent in bandages to promote speedier recovery for people that have had wounds or burn victims. It's used in solar technology, John. It's a huge one. I mean, there's solar technology all over the world, and you cannot make a solar panel without silver. Any more than you can make a battery that connects to that solar without silver. So ultimately, silver is in everything that we touch. And I think our colleague David Morgan, who's a fantastic analyst in the industry, well known across the world, said it best when he said, we cannot live without silver. That argument can be made. It's used in water purification. It's used in wood preservation. It's a catalyst. It's in bearings. It's in jewelry. And the list goes on and on and on. And still to this day, yes, it's used in photography. It's metal. It's medicinal photography, medical photography for X-ray imaging and things of that nature, but it's still part of it. And it doesn't matter if the price, John, goes to $100 an ounce. Dell or any other business in the world that buys silver in bulk, they're not going to stop using it. They put it in small increments in all the things they make, Apple and all the rest of the companies. They're going to continue to buy this. So it doesn't matter whether we have a boom or bust economy, silver will be in demand industrially. So I like it for that reason. And that is an awesome thing. So there's a relatively small supply of it. And that's why we always harp on it, John, because I want our listeners to be the most successful. And I think that you own both gold and silver, but you give silver a real shot, because most people will come to us, John, and say, I know gold, I want to buy gold, and not really say too much about silver, but this is the time for that undervalued asset. Add it as part of your purchase with gold.
And I think just like gold, again, people don't realize that you can get that silver and the gold, of course, into your registered accounts as well. You have the option of buying physical metals and holding them and keeping them in your home. But talk a little bit about the registered accounts as well, because that is an avenue you can explore.
Well, it is, and ultimately you can do that very easily. Ultimately, you can put it into a TFSA, RSP, a spousal RSP. You can put it into a LIRA. If you're exiting one career, moving to another, you're taking your pension with you. There you go. Opportunity for you to put some gold and silver in there. That can be done, and we can show you how to do that. You're eligible for the same great benefits you currently get with TFSA being tax-free and the RSP giving you the tax deferral incentives. But this is tangible, hold in your hands gold and silver. It gets stored, and you can use the phone to make a purchase, to make a sell order. It's simple, and you still get the great advantages of having the physical, which means every ounce you buy, that's 1 ounce that the rest of the world does not have the ability to own. There's no derivatives. There's no paper. This isn't a futures contract. It's not options on futures. It is not a mining stock. It is a pure physical piece of gold or silver in bar or coin form. So ultimately, that's what we want to put across. It's easy to do. It takes about 15, 20 minutes to do. And we can help you at Delta Harbour to get that done.
It's a great physical metal if you haven't explored it at all. Tell a little bit about how you can, other forms of the metal that you can get in there, and why Delta. I mean, you've said it before. You're not the only kids on the block, but why would I come to you?
Well, I think the answer is simple. We put clients first. I mean, we bend over backwards. This week's a perfect example, John. I quoted a client on Monday the price, and the price started to change. And the client came back to me with every intention of saying, yes, go ahead, I want to buy it. But the price had dropped. I've seen in the industry a number of firms that would have charged the higher price because it was a quote, it was put out there, price drops, they make more money. Mm-hmm. But I said to the client, look, the price is a little bit down. Why don't we wait till the next day, be a little bit conservative, bring your money to the table, and we'll make a purchase then. And boy, were they ever happy, because the price of gold actually went from 1,800 and change down to 1,750. And the silver they were going to buy, which we quoted at $23.10, could actually be purchased at $22.50.
Beautiful.
Spot price. So again, that's just one example of us being a good community participant. And we believe that clients come first. Without them, we are nobody. And we put 2 account representatives on every single account we open so that there are more than one person for you to talk to. There is no phone system that's perfect in the world, John, but our effort that we put forth at Delta is to make sure that every single time you call, you get a human, you get a voice, somebody to ask a question to, not leave a message and hope in 3 weeks that somebody gets back to you or be put on hold for 40, 50 minutes. We want a human there every single time so that interaction is real. It's old school. It's the mentality we have that you deserve to have the best treatment possible. And, access only. Members to Delta get access to certain things that the public doesn't see. certain buying opportunities, certain sales on certain types of product that we might bring in for short periods of time. One example this week, we said earlier, 100-ounce silver bars, RCM silver bars. Right now, we have them at US spot plus $3 per ounce. Multiplied by 100, there's your 100-ounce bar. Well, supplies last. We will do that until we are out of 100-ounce bars. And we always offer free consultation to everyone that becomes a client, whether you've bought and taken home, whether you're in a registered account, whether you're using the collateral financing for your bulk bullion. We always strive to be connected with our clients. We don't over abuse that. We're not sending junk mail. We're just trying to create a better overall relationship and to be good community stewards, to be involved with our client base, to give them the support they need. And that's what the Delta difference is really, John, when it comes down to it.
Been a great week. We'll leave it there. Pick it up next week again. You want to educate yourself even more, make that phone call. Talk to Darren and do it. 1-888-335-8645. 1-888-335-8645. DeltaHarbor.com. Harbor with a U, of course. And then on YouTube to catch these video casts anytime and go back in the archive. YouTube.com/Delta Harbor as well. We'll join you next time. Hard money right here on Sauga 960.